Hey guys, first of all, let me thank you for tuning in. This is Keith Robertson, and this is the first episode of 12 Steps of Financial Freedom. On this podcast, what we're going to be talking about is finance. We're talking about the economy. We're going to be talking about jobs. We're going to be talking about cost of goods. The only thing we're talking about on this channel is money. Okay? Because we found that a lot of information out there is public information, but a lot of information that deals with financing is not public knowledge. So we're here to, for one, show you what's being hidden in plain sight. Because when we look at it, right, the number one question today is, will the Fed increase interest rates again? Well, we know that the prime rate right now is 5.5. The Fed has increased the prime rate 425 basis points since 2022. And that has caused a lot of concern. But the reason why the Fed is increasing that rate because inflation was so high, right? So they needed to slow our spending. But when they increase that interest rate, it has not yet slowed the spending because when we look at the S&P 500, we look at the NASDAQ, we see still record highs, higher highs. Okay, what's going on right now today? I mean, there's a lot of volatility in the market because there are a few sectors really hedging the our economy itself, and a lot of it has to do with that buzzword AI. So when we look at where we are right now, we need to know what's going on. You have to have your ear to the ground. You look at this, right? So you're out here, you're W-2 wage earner. So you have issues. You have issues. I'm telling you, if you don't know you have issues, you have issues. Because 65% of the U.S. households are living paycheck to paycheck. That's right, 65% of the U.S. households are living paycheck to paycheck, with a median income of about $57,000 a year. So, Elaine, if you're making about $57,000 a year, and then you look at the median home value in the U.S. is about $417,000. So what do you have to do? You have to position yourself now. As you see what's going on in the market, right? Prices are high, right? Record high. Interest rates are high. Should you be buying? Right? Should you be buying? That's a great question to ask yourself. Regardless of the situation, and we know there's some situations where maybe death, divorce, and some things you have to sell or you have to move on to another location, right? But for the average person that's looking, the first time home buyer, first of all, no, it's not time for you to buy a house. I'm just telling you, it's not time for you to buy a house. I'm sorry, I have to say it. If no one else is saying it, it is not time to buy a house. We have record increasing house values. Okay, record increase in house value, and it's brought about because of the lack of houses for sale in the market. Lack of sales of houses in the market is because of what's going on or what happened. Okay, hold on, let me explain. Let's go back. Let's talk about this one. So for the past, I don't know, almost 10 years, guys, the money was crazy cheap. You remember we had 0% interest at one point in time. Now we're looking at what it rates 6.89% is the average rate. Now typically we're seeing 7, maybe 7.25. But here's the thing. If you're making $57,000 a year and the average home price is $417,000 a year, that means you're going to be paying $3,333 a month for your housing expense. Come on, you got to keep in mind you were qualified on your gross income on that 57,000. But when you look at what comes out of that paycheck on an average, a W-2 wage earner, you're paying 25% is coming out of your check off the top. And then if we're looking at the average household debt to income ratio, we're looking at about 37 to 40%. And then you got another 25% coming out. Come on, y'all. It is not time to buy a house. It's time to get in position to purchase a home. Because when we look at these house values, right, those house values are just climbing and climbing and climbing and climbing. However, when we really look at the market itself, what is really going on? So we look at our CPI, right? Consumer Price Index. Our consumer price index is about 3.2. So 3.2 increase in what we purchase as people, right? So we're looking at the point that, okay, the Fed has increased the rate, 4.25 since March 22. And then you got to look at it from this standpoint. Has that actually really hit your pocket yet? I'm gonna say no, it's starting to. Okay, you're starting to feel the turbulence, right? As again, I said 65% of people live paycheck to paycheck. Another statistic is if the individuals that had to file bankruptcy, if they would have had an additional $500, they wouldn't even have to file bankruptcy. But when we look at actually what's going on today, so we have that increase of that Fed payment, and we have what's called a lag effect, right? We've had 5 increases, but has it really hit the market? Because statistically, it takes about 13 to 18 months for an increase to hit the market. Price increase, prime rate increase, where your bank is getting their money. So what they're going to lend to you, that has increased. Average credit card, right now, the average credit card annual percentage rate is about 22%, 22%. And then because of the stimulus, right? The stimulus money that was given, we have artificial numbers everywhere. Come on, we have artificial numbers. Regardless if we're talking about unemployment, they're saying, hey, great, the unemployment numbers are down, the employment numbers are up. No, that's not the employment numbers are up. We remember this thing called a pandemic where no one could work. And how many people lost their jobs because of the pandemic? We see people re-entering the marketplace. That's what we see. We're not seeing new jobs being created. Now, some of that stimulus money is hitting our municipalities, and we're beginning to see some uptick there. But the question was, is it time to buy a house? No, it's not. But what we're going to do is we're going to pull the covers back on all this. Starting next Friday, we're going to be giving the end of the week report on our economy. And we may come Mondays and give you a little tidbit or bullet points about the week ahead. But listen, y'all, we're coming because it's needed and it's time to open up our eyes and to see what it is that we need to do to get our financial house in order. If you are a W-2 wage earner, hear me now. Your job is not enough. You need an additional source of income. Period. You need an additional source of income because you need to have available funds for savings, life expenses, but most importantly, you need those funds to invest because there are a lot of investment opportunities that are out here now. In that stock market, I've already told you that market is hitting historical highs. And right now, as we look at, we're in September, right? And so the market is doing what I call a pullback. So it shot up, and now I see this week, I see it pulling back a bit. It's just a correction. That's all it is. Because again, it is not a real increase. That's not real money. That's not wages. That's not companies that are out here making this money. The companies are overevaluated. Don't let me get on that. And talking about the companies and the companies' evaluation that's keeping the S&P up. Come on, 140% overvaluation in some of these companies. Come on. But when we know better, we can do better. So this is why we're here. We're going to pull the sheets back on all this so you can get your financial house in order. Because it's your responsibility to your children and your children's children, children's children. Well, listen, I know I did a bit of rambling there, but let's kind of bring it center real quick. So when we look at the housing market itself, we see the increase in the values, we see the increase in the interest rate. We have an understanding that, okay, the first time home buyers can't afford houses. We see now where individuals that may want to downsize, it doesn't make sense. Or even upsizing, it doesn't make sense. How do you go from a 3% mortgage to a 7% mortgage? Mentally, how do you do that? No, it's not happening. It's creating what I call a consolidated boom. Right? You had all these houses on the market at one point in time, right? Prior to COVID, people came in and bought the houses. Then the prime rate started going up. People started getting out of the market. I'm not selling my house now. I'm gonna wait and see what happens. Well, what happened is the interest rate went up to 7%. So now the house that you could qualify for 2 years ago, you can't qualify for it now. Okay. So what do? You find out, where is the money going? Cryptocurrency, we're going to be talking about that. They have the Fed, they have a great report on crypto tokens. I'm going to bring that conversation forward now, because you can pretty much token anything, and they're concerned about that. Because you're saying, hey, this is a picture of what it is I have to offer, and you find excitement about what it is you have to offer, and people begin to put value on that token. But is that token real? Is that token not real? That's the question that the Fed is talking about, and we're going to get into that. Let's get back to the houses. So, the scare is that it's going to be a crash. I don't see that happen. At one point in time, now I was one of the ones that actually stated that, hey, it's going to be a housing crash, but it didn't happen. And right now, I see that we have a problem, but this time it's with the investors. Okay, 40% of the houses owned in the United States is owned by investors. So when you look at that, okay, so you got 40% is owned by investors. You have interest rates that's gone up. You had a period of time where there weren't rents being paid. Now you have a period of time where prices have gone up. But you can't go in and refinance your house and pull that equity out to save you like you could in times past. Because it doesn't make sense. Because of the increased interest rate. You have industries like bread and breakfast, right? That industry is down. That industry is getting hit pretty hard. The stock prices are beginning to fall. So where does that lead you? Well, if you were an investor and you're not able to rent your place, and you see unemployment around you, you're starting to see the cost of goods going up. You're going to see the cost of fuel going up. What are you going to do when you're in a pinch? You're going to let that house go. It's coming. And so we have to get in position. Wage earners, you can't save yourself to retirement. You have to invest. And if you don't have, listen, if you're over 45 and you don't have a retirement in place, you better get moving. And if you're 50 and above, you better learn about the stock market and how to invest in the stock market yourself. Take time. Well, at least get an understanding so you will know that your portfolio manager is doing the best job that he can for you because, hey, he gets paid anyway, regardless of you lose money or not, he's getting paid. They're getting their fee. And the thing about it is they have to enter the market regardless of what the market is doing. There's a certain percentage of that portfolio that has to be invested into the market. You can't put them in bonds. You can't just take that money and put them in bonds. Why? Because you can do that yourself. What's the benefit of having a financial advisor? So, anyway, guys, look, this was just a brief little synopsis of what it is that we're bringing forward. We're going to bring you some real information. We're going to have some guests to come forward, some professionals and experts in various areas of finance to also share their thoughts with you. But look, if you have any questions, please put it in the comments. You can IM me. But 12 Stones of Finance is sponsored by 12 Stone Consulting. So it's being sponsored by 12 Stone Consulting. And 12 Stone Consulting is a commercial brokerage firm that specialize in funding for investors and business owners, as well as consulting startups to see exactly how you need to position yourself, the type of entity you need, the type of bank accounts you need. What is the best financing for you? So the key component with 12 Stone Consulting is they have underwriters on staff. So your file is underwritten first before it goes to the lending underwriter to increase your percentage of success. So, hey, again, my name is Keith Robertson. Please come back again next week, next Friday. And as this information is being presented, if you feel it's useful to you and your household, please like and share. But anyway, thank you for tuning in, and I look forward to seeing you next time.